Time for Money Tuesday, and a new tax deduction could be putting more money back in the pockets of many Americans. Adults 65 and older are now eligible for an additional deduction through the One Big Beautiful Bill Act. Here to talk more about that is financial expert Corey Reamer with the Welch Group. Good to have you with us this morning.
Hey, good morning. Good to be here.
All right, first break it down in terms of the deductions and what's involved with that.
Yeah, well, we covered this about a month ago.
Did.
This is something that we feel like is very important to cover again, just because it's significant, especially for those that are 65 and older. When it comes down, we're getting close to the end of the year. You got to make sure that you're really paying attention to the planning aspect of your finances as you start to look at taking certain RMDs or charitable giving or other items to make sure that you stay under this threshold. So they did increase, the standard deduction for a single filer. $15,175, is the new standard deduction for single, and then you've also got $31,500 for married filing jointly. So that's a big help as well.
All right.
Then there's also the existing personal exemption that already existed that was $2,000 for a single filer, and then $1,600 for each individual if you're married filing jointly. So now this new One Big Beautiful Bill Act adds an additional $6,000 deduction for single filers and $12,000 for married filing jointly. So you've got a
for those
lot
65
for 65 and older.
Okay.
Yeah, absolutely. So you've got a lot of exemptions that you can take to help your taxable income situation for this year.
So what do you want people to think about then if they're in that situation right now?
Yeah, well, this is something that's going to be temporary. So it starts, for this tax year, and the last year is the 2028 tax year. So from a planning perspective, you've really got to look at what you're going to be doing for the next 4 years, when you're going to be recognizing income over the next 4 years. Might be best to push some of that income recognition for years down the road where this exemption doesn't come into place. Or you've also got to look at making sure that your income is below the certain thresholds. So this, full deduction is for $75,000 and less for single filers and $150,000 or less for married filing jointly. But then there's a phase out that happens, and for single, it's up to $175,000. So you get the full deduction if you're 75,000 or lower, and it fully phases out at 175,000 or above. So there is some ways to make sure that you're planning to get at least some benefit from this new deduction. And for married filing jointly, it's $150, you get the full deduction, up to $250 until you're fully phased out. So you really got to work with your accountants, your financial planners, really look at where you're taking income, how can you offset some of that income so that you can realize the full benefit of this new deduction for the next 4 years.
And I think Corey was trying to break that down as simply as he could, but again,
a lot of numbers. There
are a lot of numbers, but that's really as simple as you can break that down, so there's a lot to it, but that's why you need to get some advice. What's the last takeaway? We got about 15 seconds.
One other thing is you don't have to itemize to be able to do this. Some people think that, if I take the standard deduction, then I'm not going to be able to get this additional deduction as well. This is whether you itemize or take the standard. So remember that when you're filing your taxes. And again, consult your financial advisor or your accountant. Try to figure out ways where you can realize as much of this benefit as possible.
All right. Thank you very much. Corey Reamer with Welch Group. Appreciate it.
Yeah, thank you.
All right, we'll be right back.